And they are back. The Bulls and Bears this week and every week. Gary V. Smith, Jonas Max Ferris, John Layfield, along with Hadley Heath Manning and Jessica Tarlov. Welcome to everybody. I actually missed you guys, strangely enough. Gary V., should the president-elect slash both corporate and individual taxes at the same time?
Dagan, it should be #1 priority. Look, on the corporate tax side, we have, as we've talked about many times in the past, a third highest corporate tax rate in the world. People wonder, why are companies like Apple and et cetera keeping so much money off seas? Because we have a high corporate tax rate. Bring it over, lower the corporate tax rate, bring that money over here, be better spent. On the personal side, my issue has always been about fairness. If you think the government should get more money, even the money they get, you're basically saying the government can spend it better than you and I. But in a Gallup poll, the average American thinks that the government wastes 50% of the dollars they have out there. Look, we can go through department by department, whether it's the Defense Department, Social Security, Medicaid, Medicare, any one of those departments waste billions of dollars a year on fraud. Let the individual keep their money and better spend it rather than on the Solyndras and on the Amtraks and all the other silly government projects out there. We can spend it better. We can stimulate the economy, not the government.
And, Hadley, if you cut individual taxes in addition to corporate taxes, that flows to small corporations, small companies who are taxed at those very individual rates.
That's right. Let's not forget, a lot of small businesses do file under that personal income tax code, and small businesses are an important part of our economic engine. They create a lot of jobs. We need that job creation. We need to see economic growth across the board. So I agree, both the corporate rate, which is higher than just about any other developed country in the world, and the individual income tax rates across the board. For the wealthy and for middle-class Americans, we need to see decreases in those rates.
And, John, you'd agree that we do need to do something. You look at the average annual growth under President Obama, below 2%.
Yeah, and look at the growth. Last time this was reformed was the Tax Reform Act of 1986 under President Reagan. You had GDP over 3%. They slashed the corporate tax rate, the highest in history, until this happens under President-elect Trump. What he's talking about will be the highest at this point. Growth went to 4.2% within 2 years, an incredible growth rate. I think you'll see much of the same thing right now, specifically on small business. When you talk about small business, they're talking about the pass-through income, doing something with that specifically, because that is on the individual tax rate at 39.6%. You're talking about taking that down to 15%. You give the average small business 20 to 25 more percent out of each dollar that they make. That goes straight into employees, and that goes straight into capital investment because they have a breathing room for the first time. And when you talk about the overall corporate tax rate, the reason companies are offshoring in Ireland and going through this complicated double Dutch system that they do is because the corporate tax rate is 12%. If you take it to 15, as President-elect Trump is saying, there's less incentives for companies to offshore to begin with. You will see a lot of those corporate profits come back.
And, Jess, why not do both? Why not do corporate and individual and just tackle it? To quote President Obama in reference to President Trump, what did Obama say? I won. Well, not only did Donald Trump win, but the Republicans won.
You've got it all. You've got it all.
So why not use your political capital?
Well, I think that they should, but he's going to have 4 years of this, right? The situation's, well, I guess 2 years. We'll see what happens in 2018. I wanted to bring up what Steve Morshead, who was, an economic advisor to Donald Trump, and he talked about how we should actually pace through this and do the corporate tax cut first and then go to personal income taxes, because he was talking about the $2.6 trillion that's going to be repatriated to the U.S., and Donald Trump will only tax that, I believe, at 10%. So we'll get all of that money back, and that'll kind of be a sweetener to Democrats who can use the money for the infrastructure. Well, we need something.
To spend.
I need a highlight here.
They need a bribe.
You have a Republican president who's more into infrastructure spending than any of the other Democrats.
Fair enough.
So that was Steve Moore's argument for pacing it out. I think that that's a good idea, but yes, I think President Trump, he should go for it if he can. I just think that we need to work both sides here. I know we're in the minority, but it is important to keep some Democrat friends.
Jonas, why not do both?
Why not do all three? Cut the federal gas tax, Walter. And say, we're all going to go broke. We might as well go broke faster and have a good time on the way out. Look, there's a big difference between the beginning of the Reagan administration and the second Bush administration, and that is the percentage of debt to GDP was a lot lower, and you had a lot of room for tax cuts and expanding the deficit. Now, we have major problems with the tax code, and this would be a great opportunity to finally clean it up and get rid of all the nonsense that exists where we have these artificially high rates, then you have a million deductions, all that complexity going. But as far as actually lowering what we pay, corporate, look, I wish we had no corporate tax. It's a double taxation system anyway. But the reality is we're already running huge deficits with that tax rate. And by the way, the top 50 corporations pay about 25%. It's really effectively not that high. And that's because of all the nonsense that they could lower the rate, remove the garbage, personal and corporate, but you can't stop the amount of money the Treasury is getting right now. That's just going to cause a major problem. We already saw that with interest rates going up in recent weeks because of the borrowing that's going to happen, which is going to hurt consumers as much as the tax break is going to help them.
Which, Gary B., could be just because of the growth and the growth that tax cuts would bring and the growth that would lead to maybe finally a little bit of healthy inflation.
Well, let's avoid the health. I never think inflation by itself is healthy. I mean, when it results from more demand, that's good. But can we see growth that these tax cuts will spur? Absolutely. Look, and here's the reason. The individual spends more efficiently and more effectively than the government does. When I spend $1, if it's wasteful spending on a company that goes out of business, well, then the company goes out of business, I wasted my $1. We give that $1 to the government. There's never a project that goes bad. It's always asked for more. I guarantee there's going to be more cylinders. By the way, this infrastructure spending that Trump says, I totally disagree. That's a boondoggle right there. So don't think he's got the greatest idea in the world. I just think the government spends it inefficiently. Look, let me give you an example. When you give $1 to charity, your local United Way, they spend about 70 cents of the dollar on good stuff. When you give that same $1 to the government, they spend about 30 cents because the other 70 cents is spent on bureaucracy. That's just a clear example of how wasteful and inefficient government is.
I mean, that's all well and good, but we're also forgetting here that Donald Trump's tax plan has been appraised at adding $5.3 trillion to the debt.
If we keep things the same, why can't we cut things like Social Security? Why can't we cut the billions wasted
Donald
in
Trump's
Medicaid?
Voters who are older don't want that anyway, and he promised that he wouldn't touch entitlements, which is another wonderful liberal point to Donald Trump.
The problem right now is not revenue. We're at 19% of GDP plus. That is at a historic high for taxes. That is about all the economy can take by nearly every economist out there that is surveyed on this. And we still are spending a lot more than we bring in. We went at $2.1 trillion when President Obama came into office to $3.3 trillion right now that we're bringing in, and we're still spending $500 billion more. The fact that these goofs in D.C. can't balance a budget has nothing to do with tax policy. That is a separate issue. And the corporate tax rate, to say that the average big company pays 25%, look, this is why this never gets changed. The small businesses are the ones that are paying 40% because they're paying this tax pass-through rate. They're the ones that need the tax break, not the big companies right now. But they're saying, well, effective tax rate. That's because the big companies have bought off politicians. The small companies have not. They're the ones that create jobs.
And Hadley, I look at this tax code that's north of 74,000 pages at this point, and I always think that it sticks it to the people who cannot afford it. It sticks it to small business owners, and it sticks it to individuals by complicating something that they can't get their arms around.
That's right. The cost of paying taxes isn't just the check that we send in to Uncle Sam. The cost of paying taxes in the United States is following the tax code, complying with the tax code, an enormous amount of time and resources that Americans spend on hiring other people to do their taxes or buying that software every year that we have to file our taxes. So absolutely, I hope that we clean up the tax code, lower rates, and simplify it so that an ordinary person can understand their tax bill. And in terms of, debts and deficit spending, absolutely, that's bad. It's bad when Democrats do it. It's bad when Republicans do it. And we're going to have to stick to our guns if we believe in limited government.
Thanks, guys.